implementing the international expansion strategy.
马中关系源远流长，经过了45年的这个紧密合作，经贸之间的这个成长，马中的关系呢更上一层。我们在未来展望双边友好邦国的关系，朝向新的里程碑迈进。
As a platform for international interaction, the professional teams of the association and the 9 state administrative branches have successfully encouraged numerous numbers of Chinese investors to collaborate with local entrepreneurs over the years.
MCCC being a focused China-Malaysia trade organization, it opens up a new avenue for us to look at trading with China. China is a country that we cannot ignore. It's humongous and the trade opportunities are big.
MCCC not only enables Malaysian entrepreneurs to experience the prosperity of Malaysia-China business, but also enables the Chinese entrepreneurs to experience the diversity of Malaysian culture. This has boosted the confidence of cooperating with local businesses, therefore strengthening trade development. In order to truly understand China's economic status, MCCC led local entrepreneurs on a visit to the commercial hub in Nanjing, China, and to meet the local entrepreneurs there. MCCC started a course related to the investments in China and Malaysia, organizing the One Belt, One Road English Forum. MCCC also organized a Greater Glory 45th anniversary of Malaysia-China diplomatic relations to celebrate the close relations and the rich historical ties, to further encourage the economic development and maintain the high accelerated growth between Malaysia and China.
马中总商会自1990年成立以来，积极地发挥桥梁和纽带的作用。今天的中马关系已经进入了新的历史阶段，必将迎来更大的发展机遇和更广阔的发展空间。
The rapid growth and increase of business activities in China make it a globally coveted market. Malaysia's strength lies in its stable, growing economy and multicultural environment.
3, 2, 1.
"对于马中总商会未来的发展，马中总商会一定要尽量的有一个机制来够授权给我们的各个委员会、各州的州分会，让他们有这个领域、有这个舞台去表现他们各自的才华。这一点是我们这个总商会会成功的一个要素。
Regardless of the business nature, choosing only the strongest and advanced platform is the most effective method to venture into any foreign market.
Hi, Chee.
Hi, Dr. Shahree. Can you hear me?
Yep, can hear you.
Yeah.
Can you hear me clearly?
Yes, I can.
Okay, great. Hi, Kotun.
Hey, hi. Everybody
back.
on? Yep.
Few more, I guess.
So far, 26 on.
Ihan, you wanted to ask me something just now. Ihan?
Is she on the line? Is she online?
The video is on, but I'm not sure whether she can hear us. Ihan, can you hear us? Ihan?
We have 5 more minutes.
Yeah. Can you check whether she can unmute her? Doesn't seem like she's hearing what you're saying.
Yeah. She's online, just that her speaker is muted.
Yep.
Right.
Not sure whether she can hear us either, because I've been asking her, but look like. Ihan, you hear us? Doesn't look like it.
Yep.
Maybe someone can WhatsApp her. Chee, you can hear us, right?
Yes, I can.
Good. All right. Ihan. Ihan. Someone needs to help Ihan online.
Yehan, we lost you online. Are you online?
She seems to be online, but I think somehow the audio and video, or rather the audio is not on.
She says she is, but we can't hear you.
Hi, Ihan.
Hello, can anybody hear me?
Yes.
Yeah,
okay.
Now we can. Now we can.
Oh, but I can't hear any of you.
Huh? That's weird.
how is it now? Strange.
If you are using a laptop, is your mic working?
Forty-five participants already.
Yep.
Hello? Hi, good
Yeah, yeah.
afternoon.
We
Hey,
can
hi.
hear
Hi,
you.
hi.
Hi.
Can you hear us?
Yes, well and
Okay.
clear now.
Okay,
All right,
that's
good.
Okay.
Glitch over there. Good afternoon, everyone.
Hi,
Not sure
afternoon.
what happened there.
You didn't change your daughter's computer or something, right?
No, no, no. I just switch it. I switch on the cartoon all over again so she can watch the same thing again.
So at 3 o'clock.
Yep. Yep. Are we in the group now?
That's 48 already.
Are we live yet? Oh, we lost you again.
Yeah, I'm still here. Can you hear me?
Yes,
Yes,
we
yes.
can.
Yeah.
Yok Teng, are you there?
Yes, we can hear
Uh,
cloudly.
Okay. Just tell us when we can start, yeah?
All right, you can start anytime.
Okay. So
But
you're
I
in
can't
the
see you, Mr. Tan.
Huh?
Yes.
Can you see me now?
Hear cloud.
But can see more of your hands.
Oh, is
I
it so?
think you need to tilt the screen higher.
This way?
Can see more of your face now. But now
Okay,
there's a
okay.
light in the background.
Oh.
Yeah, there's light right above your head.
Yeah.
All right. Yeah, maybe I move this way better.
Okay.
Is it good now? Is it good?
You're quite bright on your back.
Still quite bright at the back.
Must find the right angle.
No, because I think your camera is pointing upwards.
Yeah, that's why. Yeah.
Yeah, so you got
Is it
to
better?
point horizontally.
Yeah. Maybe you put something below your phone, then you can lift it up.
Yeah. Can you raise
Ah.
the
I hope this is better.
Yeah, better now.
Okay. Okay, everybody online, yeah?
Yep.
Okay. 大家下午好. Very good afternoon and welcome. I'm Kok Tun from Business, Economic and Investment Committee of Malaysia China Chamber of Commerce, or in short, MCCC. This is our 8th series of webinar organized by MCCC I will be your moderator this afternoon. And today, we have three very interesting topics to share. First is on global and Malaysia economic outlook. Particular focus will be given to construction and property sectors, which I believe has the most economic multiplying factors. Mr. Loong Chee will take us through this particular topic, then followed by Build Back Better, a resilient economy. And last but not least, how do we reshape our business strategy? We are indeed very honored to have three learned panelists to share their thoughts with us this afternoon. And they are Ms. Tan Yi Han, Mr. Loong Chee and Dr. Muhammad Shahree Zainuddin Madrus. Welcome, ladies and gentlemen. Yi Han is the Executive Director of Research for Social Advancement, or in short, REFSA, a progressive not-for-profit think tank organization. Yi Han spent more than a decade as acquisition tax consultant in London and later worked in the property development industry, focusing on business development and sales. Yi Han holds a law degree from University of Leeds and a master's degree in management with finance. She is also a fellow CA with the Institute of Chartered Accountants in England and Wales.
Hi, good afternoon, everyone.
Hi. Yeah, hi. Thank you for accepting MCCC's invitation. Appreciate that.
Pleasure.
Dr. Shahree is the principal at Global Entrepreneurs Exchange. He has with him over 20 years of experience working in local and international oil and gas companies. He was an EXCO member of the Malaysia Oil and Gas Services Council, MOGSC, and also played an important role in setting up Malaysia Petroleum Resources Corporation, or MPRC. He was the CEO of Matrade from 2017 to 2019. Dr. Shahree has a PhD from University of Cambridge and a first-class honor degree in engineering. Welcome, Dr. Shahree, and thank you for accepting MCCC's invitation. Appreciate that.
Thank you.
Third but not least, a CFA charter holder, Chee has very strong equity research background, having worked in various local and foreign financial institutions, particularly in construction, infrastructure, and property sectors. He was voted for the best industry analyst in Malaysia for Asia Money Poll in 2018. Chee graduated from Monash University in Computer Science and Accounting. Thank you, Chee again for accepting MCCC's invitation to be today's panel.
Good afternoon, everyone.
Good afternoon. Ladies and gentlemen, global pandemic and global economic meltdown. Government around the world responded by putting up billions of dollars of stimulus packages, biggest being the American with more than $2 trillion and it's counting. Central banks pumping in liquidity to markets with unprecedented monetary easing policies. Closer to home, Bank Negara cut OPR 3 times this year, latest being 5th May with a 50 basis point cut in OPR. And State Reserve was slashed by 1%, which released approximately 13 million into our financial market system sometime in March. Likewise, IMF declared a world recession while global growth rate was stressed to much lower ranges. Bank Negara revised our 2020 GDP growth to -2 to +0.5%, quoting challenges, global growth outlook, and weakening oil prices. Now, with that backdrop, I would like to invite Chee to share his views on global and Malaysia market outlook, and thereafter on construction and property sector outlook. Chee, the floor is yours.
Okay, so let me just share my screen now. All right, so this is my setup presentation. So I have about 78 slides and I will take about 2 hours. No, I'm just joking. Basically, I will just run through the key slides and I try to keep it to 15 to 20 minutes and leave more time for discussions. Yeah. Okay, so basically, in terms of the outlook, why not I share what has the government done? So For a start, I mean, the global pandemic in terms of the impact of the COVID-19 will be a drastic slowdown in global economy, and this will affect Malaysia, being an export-oriented country. And the reason behind that is the government needs to spend. That's why they came out with this 260 billion ringgit fiscal stimulus to support the economy, given the risk of an external slowdown. Okay, so in terms of direct injection by the government, it's only about 35 billion ringgit, whereas the balance will come from non-government sources like Petronas, and that would actually reduce the impact on the federal government deficit. And this is the first time that we have seen the highest bantuan prihatin nasional in terms of cash handouts to people to help people live through this recession. So in terms of, why not I just go through the page 8. Okay, key thing to look for is what the government is doing is because we are expecting a global recession. We have seen the IMF come up with a -3% GDP contraction for the global economy. Of course, for Malaysia, they are projecting a range of between -2% to -5%, -0.5%, and that is according to the Bank Negara. Okay, so against this backdrop, that's why there will be a lot of spending to help offset and help the SMEs as well as the people. So what the government is doing would see a federal deficit of 4.7%, which is high and would not be meeting their earlier target of about 3%. So in terms of the operating surplus will now be an operating deficit for the first time since 1987 for the federal government budget. So I think the government is really doing all it can to help to reduce the impact on the economy because of the MCO and also the pandemic. I'll run through page 13. Okay, this is our forecast. We are projecting a more conservative GDP growth number of -3.5% versus Bank Negara's worst case of -2% currently. The reason being we are more conservative in terms of the private consumption forecast, where we are expecting a sharp contraction of -4.5%. So in terms of going to slide 16, you can see the private consumption indicators have already started to see quite negative impact. One key thing to look at is passenger car sales have actually dropped to -59% in March. So a lot of people don't even have the money to put on food, and that's why car sales have actually fallen quite sharply. Okay, I'll run through page 626. Okay, you can see the current account surplus has also been falling. This is basically the net exports versus imports for the Malaysia. And we are projecting it to narrow to as low as 1.7%, which is a historical low in 2020. And I think a contributing factor will be the weak commodity prices, where we are still a net exporter of oil and gas, and also the weaker E&E exports. Okay, this is the IMF forecast. And you can see the concern there, the global economy is expected to contract by -3%. And even ASEAN 5 countries, we are looking at -0.6%. And Malaysia, we are looking at -1.7%. This is the IMF forecast. Okay, then in terms of the easing monetary policies, this is what the global governments have thought as a panacea for the slower economy. And to offset that, they have basically been releasing more money into the system, flooding markets with a lot of liquidity in the hopes that this would actually reduce the impact on the economy, on the global economy. All right, in terms of these are the measures where the government has rolled out, various governments in the region as well as globally in US and UK. You can run through that later. All right, so I think the accommodative monetary policy globally will remain because of projection that economy will be slower, but a lot of people are expecting a V-shaped recovery, which we don't think so. It's most likely will be a U-shape, and that is a key risk for the Bank Negara forecast. And that is why you can see they have another cut of 50 basis points for the overnight policy rate, and in total is 100 basis points cut this year, and that is to stem the impact of the pandemic on the economy. Now I will go through our expectations and the market outlook. So in terms of the KLCI, you have seen a sharp contraction of minus 11% year to date, and earlier it was even a sharper downturn, but it has recovered slightly. I think in terms of sectors, we have seen the rubber gloves actually outperform, but all other sectors actually underperform the market. So in terms of the market review, you can see a big reason for the drop in the market is because of the sharp 2.4 billion ringgit outflow in terms of portfolio funds from Malaysia. And for the Asia 6 markets, we are talking about $48.7 billion. So that is quite a drastic outflow, which is leading to the correction in the markets regionally. So this time round, it's not only the equity markets that have seen the outflows, even the bond markets like MGS has been seeing some sell down as well. But I think there's still a flight to safety, as indicated by the NGS yields easing, and the US dollar actually rising against most currencies. So in terms of market outlook, you can see the market is actually pricing in a V-shaped recovery. I think consensus-wise, corporate earnings for the KLCI is only expected to drop by about 3.7%, but we are more bearish. We expect a 13.4% drop. And in terms of recovery, the market is expecting 9.8% rebound in 2021, but we are still only forecasting a 5.8% increase. I think in terms of price to book, we have fallen and at trough valuations now. Okay, the key thing is we do expect the market to see a correction again despite the rebound we have seen over the past month, because as the corporate results come out and there's a disappointment in terms of release of results, and we do see some pressure on share prices, and that will actually drag the market down. And our KLCI target for the year end is actually 1,008, and that is based on a one-time price to book. So this is another reason we have seen oil prices fall, and that is actually negative for the Malaysian market because we are a net exporting, oil exporting country, and generally that has an impact on the negative impact on the market. So in terms of the market outlook as well, we have seen the COVID-19 impact, but we believe that the market is actually underestimating the economic impact of COVID-19. We have seen shops close, but even with the release of the MCO, I think it will be a slow start because a lot of people will still be cautious about spending when there's concerns about job security. For example, people are not going out there to buy houses and buy cars immediately. So that would have an impact on private consumption and also the economy, and that would actually impact corporate earnings going forward. All right, so in terms of market as well, that's why you have seen during the Asian financial crisis, the corporate earnings actually fell by 60%. During the global financial crisis, it actually fell by 49%. So I think the market is actually pricing in only a slight drop in corporate earnings, which could be a negative surprise when the actual results are released. All right, so there's the charts on the negative earnings growth they are projecting. Okay, in terms of positioning, then we do see the earnings being dragged down by banks, and that's why we are underweight on the banks, and that has a big impact on the market as a whole, because weighting 35% of the earnings for the market comes from the banking sector. All right, and that's reflected in the weak price to book at 1 time, close to 1 time now. In terms of PE, though, it hasn't bottomed, and we are still trading closer to the 16 times mean, which there's downside to it if earnings are cut for the market. So in terms of regional outlook, we are also relatively, on a relative basis, outperforming the regional markets, and that's why our valuations are not cheap compared to the other countries in the region, like Indonesia, for example. So in terms of sector positioning, then I think the one that is most resilient in currently would be the rubber products, and this would be the glove makers like Top Glove, Kosan. So that's the reason why we are overweight on the sector. We do expect this sector to see robust demand, given the concerns on the pandemic. People wear more rubber gloves for in terms of the demand for healthcare, and that would actually sustain the outperformance of the stocks. But other stocks, other sectors where we are neutral on are consumer, healthcare, the REITs, which are more defensive, property, mainly because of valuations, and technology, where we do see a recovery when the global economy starts to recover in the 4th quarter. Okay. Other sectors, we are still underweight. All right, in terms of the, I think this is probably the most important slide which people will look for, because you do want to make money in the market. So these are the stocks that we are recommending. So our top buys that we are recommending, there are 10 there. You can see there are 2 glove makers, Top Glove and Kosan, that we like. I also like QR Resources, which is a more defensive, consumer staples food supplier, and also Inari, where we expect a takeoff in terms of like 5G in second half of this year with the rollout of more 5G phones, then it would benefit Inari. And also Taliworks, where it's very defensive because they are in water supply as well as toll roads, where you would generate recurring cash flows to sustain a high dividend rate of close to 8%. All right, and this is just a coin perspective. In terms of long term, we do see values in a lot of the stocks. I think the key theme to look for is high dividend yields, and you can see Taliworks ranks the highest in terms of dividend yield currently. Other key themes to look for is in the current foreign shareholding, where we have seen outflows. We would expect those stocks with high foreign shareholding to see continued pressure, selling pressure, if they disappoint in terms of earnings. So you can see the highest there is Genting and Malaysia Airports. Another key theme is concern over shrinking liquidity. Then it will be difficult to refinance existing debt, and you can see those stocks with high net gearing will be at risk, and that's why you can expect some weakness for some of the stocks like Axiata and Malaysian Cement. Okay, I think these are the key risks that we are talking about, where there could be earnings disappointment. Secondly, there could be a global recession that will be prolonged, a U-shape rather than a V-shape. And thirdly, foreign sell down of MGS. So far, it still have been holding up well because Malaysian MGS government bonds are still giving quite a good return relative to a lot of US and European bonds, which are giving yields of less than 1%. In terms of, I'll touch a bit on the construction sector, where I am underweight on. The reason being that the earnings for the sector is expected to contract by 8% and only expect a 1% recovery in terms of earnings growth in 2021. The main reason is the MCO has seen a stop work for most of the construction projects, and only now that it's lifted, so there will be a delay in terms of like progress billings for a lot of the contractors. So there will be some earnings risk in terms of how soon a lot of these construction projects can be started, because the government has imposed that all foreign workers that want to work on site has to take a COVID-19 test first. So that would also delay works going forward. Going forward, I think there will be also budget constraint because the government is spending so much to help SMEs and also the people, and there will be less money to spend on infrastructure. And some of the big projects that were supposed to be rolled out, like the MRT Line 3, will be delayed, and that would actually see less excitement for the listed construction stocks. So that's the reason why I'm underweight, and my top buys are Sunway Construction, AME, Elite Consortium, and Teleworks, because these stocks are less affected and less reliant on government projects. And I have top sells on Bermuda, IJM, and MRCB because of the risk where the chances for them to replenish their order book, which they need substantial government contracts, would be at risk. On the property sector, I think we do see some value in the sector in terms of valuation, and that's why we have a positive view on the sector, a neutral view on the sector, I mean, because the valuations have, I believe, have bottomed, but I think the catalyst in terms of like higher sales won't be there. I think there's a high chance that a lot of the property developers will have to cut their sales forecast. You can see a lot of them are still expecting to at least maintain last year's sales. For example, SB30 at 4.55 billion ringgit. But with the MCO impact, with the concern about basically job security, a lot of people won't be rushing out to buy houses, and that lies the risk in terms of the sales causing sales disappointing this year. So I think another reason is CPI is also, or we call it the inflation index, would also see a sharp, flat kind of scenario, and that would see people less likely to buy properties as an inflation hedge, because property prices are not expected to go up, and you're expected to stay flat as well this year. So in terms of the sector, we remain neutral mainly because a lot of these stocks are trading below book value, and also if you look at some of the stocks like UOA Development, they actually pay quite good dividend yields of close to 7 to 8%. And for IOI Properties, the stock is so cheap that at 0.3 times, I think it's attractive, and that's why these are the top buys that I have in the sector. So with that, I end my presentation. Feel free to ask any questions you may have.
Thank you, Chee, for the very interesting outlook that you presented. As you can see from Chee's presentation charts, most of the charts are heading south, and likewise, you also predicted that this is going to be a U-shaped recovery compared to the one in 2008-09, where it was a V-shaped recovery. Likewise, for the GDP outlook revision, you seem to have a very weak outlook for Malaysia, minus 3.5%. Am I right? Versus World Bank's minus 0.1, and Bank Negara's worst case scenario is 2%, I believe. Yes. Now, can you share with us what are the considerations that you have put in to arrive at that kind of forecast?
Okay, one of the key one is I think Bank Negara is expecting the private consumption to not drop as much. That means when they release the MCO, people will start spending again to support the economy. But for us, we are more bearish. We are expecting a minus 4.5% in terms of private consumption growth, which is a big drag to the GDP because it contributes typically 60% of GDP for our country. So with a sharp contraction in private consumption, then it would drag down the overall GDP growth, and that's why we are projecting minus 3.5%.
Right. As I mentioned earlier, during the 08-09 global financial crisis, global market, particularly that of equity, has dropped as much as 56%. In 2020, we probably see like 20 to 25% correction so far. Now, in your opinion, will this continue, or like the old saying says, sell in May and go away? What is your thinking on this?
So our view is the market will see another sharp correction and could be worse than the first one, mainly because I think there will be disappointment in terms of like corporate results. That's already starting to show in terms of the companies that are reporting results for the first quarter, but that wouldn't be the full impact. The full impact will mostly be felt in second quarter because in the first quarter, we only had less than half a month impact from the MCO. And in this quarter, where we have a full impact as well as a slow in terms of restarting the economy, then you will see a weakness in terms of corporate results. So for that reason, that's why we do think that there'll be a sharp correction. And we are for now projecting a KLCI target of 1,008. So that's a sharp contraction from current levels of closer to 1,300 plus. So I think it could be more of a W-shaped kind of recovery for the markets. So at this point, the concern is there will be another correction for the markets.
And roughly when would that be? This month? Next
could
month?
Be this month. Could be
this
month and next month. I think you will drag on from May to June, July.
Okay, thank you for that pointers. And now, if I may draw your attention to the event that, or rather the sector that you are familiar with, you are good at. NAPIC reported that completed and unsold property hit 41.5 billion overhang as of December 2019. Now, this represents about 11.2% in terms of volume and 16.1% year-on-year growth in values. With this kind of backdrop, I mean, with the COVID impact, people are not buying houses. From your experience and your thoughts, how can the private sector and government make use of these assets, the overhang assets, and use it as a tool? Or is there a way we can use this as a tool to revitalize, to kickstart the economy?
Okay, I think the government needs to do more to help to clear the overhang. What they did last year with the home ownership campaign, where there was a waiver of the stamp duties on transactions or property, that actually helped clear some of the overhang. But I think even 1 year is not enough. That's why a lot of the like Radar, which represents all the property developers, are asking the government to extend the home ownership campaign to this year and to sustain the recovery in terms of or pick up in demand for properties to support the industry. Other things they can do is maybe promote more rent-to-own schemes, which they started last year, and there will be more in terms of this year where property developers may just use some of these overhang units to rent to people first, and later, maybe in 2 years, they can, when they are more financially able to, they can take up a loan to actually buy those properties. So eventually, that would actually utilize the overhang properties at the present time, and in the future, actually clear some of the overhang with the purchase of the property. So I think these are some of the measures. Other measures that the government could also consider would be to, maybe give a waiver for real property gains tax, because at the moment it's as high as 30% for a property that you just bought over the last 2 years. So I think that if there's any gains to be made, there will be taxed at 30%. So I think if the government promotes more home ownership and reduce some of this transactional costs, that would actually help the industry to recover, in my view.
Excellent, excellent. Earlier you did mention about REITs. Is there any other, can you be more specific on how this REITs works under this low interest rate environment, and what are the upsides to these REITs? You may share maybe one or two your favorite REITs that's in your listing.
Okay, so for the REITs, why we are positive on the REIT sector is mainly because of the differential in terms of the yields. On average, I think most yields, most REITs are yielding around 4 to 5%, and against your MGS, based on an OPR rate, is only about 2%. You put in the bank or in money markets, for example, then that is a positive return on investing in REITs, and that is why I think REITs will continue to attract investments. And in terms of our favorites, we do like some of the REITs like Axis REIT, and also I think the other one would be KLCC Property, which is more resilient. So I think these are ones where we have a whole core, but if you want to invest for the long term, it would be interesting to look at these stocks.
Okay, thank you very much, Chee, for sharing your thoughts. We may come back to you later on if we have any other questions from the public. Yeah.
Okay.
Now, ladies and gentlemen, so far we have like 3.75 million infected cases globally. Where is at 260,000 deaths. Closer to home, we have like 6,004 infected cases with 107 deaths. This is something quite alarming. Now, the pandemic not only exposed the weaknesses of our economy, but our social structure, the price to pay when we do not pay enough attention to it. The resilience of the institution and ecosystem that were built over the years is being challenged, be it politically, economic, and businesses, particularly that of SMEs. Our social system and our ability to respond to shock and intervene effectively with minimal damages are also in question. I believe all this, what I've just mentioned, Ihan and her institution, REFSA, will have many valuable research and experience that can be shared with us this afternoon on what are the new normal going to look like, and which are the sectors that will be badly impacted by the pandemic, and where are the opportunity that we can leverage on to build back better. And Ihan, if I may pass the mic to you on your session, Build Back Better, Resilient Economy.
Sure, thank you very much, Cotton. Hi, good afternoon, everyone. Just let me pull up my screen to share. I have a couple of slides, not too many, and I hope I'll be able to bring them through relatively quickly. Sorry, just let me see. Okay, first of all, I would just like to thank MCCC for inviting me to join this webinar and to share our views and my views on it. I think given the current pandemic and the subsequent crisis that we and the whole world is facing, it's important that we start this conversation on future looking and how can we build back better and build back the economy better per se. So today I'll start by giving a very quick overview of where we are. I think Chee did a great job. I mean, his slides are very insightful, so I don't want to go through too much on the numbers. But after that, I want to touch a bit on the concept of build back better. And lastly, some thoughts on collectively as a society, how we can build towards a more resilient economy and sort of start thinking about the way forward, because as we all know, business is not going to be as usual anymore. So Chee highlighted some the fact that the economy's scenario now through GDPs and figures. So I want to start my slide with highlighting through a different set of analysis. It's something that our team REFSA pulled up very quickly. This is two charts showing Malaysia and Singapore's the change in the Apple Maps routing request during and before the MCO. So what it basically means is that this is just showing people using Apple Map. So those who have an iPhone using Apple Map to when they need to go from location to location, they will use the Apple Map rather than say Google Map. So you can see that for Malaysia, for example, so you can see it from Malaysia, for example, people have still been moving gradually here and there. I think the spike here is probably during Chinese New Year. And the moment MCO started, you can immediately see that everything dropped. That means everybody is staying at home. Whereas in Singapore, it has been quite gradually going further down and down and down. And then obviously, most recently, when they started enhancing their so-called circuit breaker measures, then the numbers dropped further. But I think generally it was well observed. It had good results in terms of containing the pandemic, but it comes at a cost, and the cost is basically people don't go out, and so when you don't go out, you don't consume, and businesses will suffer because they are closed, etc., etc. Now the next slide I will just run through very quickly. These are the points that Chee has already mentioned earlier. These are the numbers, and it's nothing new. So what I would just wanted to also say is that these numbers, the GDP growth and unemployment figures that countries and even Malaysia we have been looking at, they are lagging indicators, which means that we won't know how bad it is until we are already in it. So we know how bad it was last week. We know it's going to be bad this week and going forward, but we don't know exactly how bad it is. So the risk is that this kind of travel restrictions and MCOs will create a supply side shock, which will or potentially tip over into a demand side shock. So what you are getting is because shops are closed, people start losing jobs, they start losing income, then consumption level drops. And even when the MCO is relaxed or lifted, you still don't get people to go back, even though restaurants are opening. So I'll mention a little bit, share my thoughts a little bit on that later on. This next slide is a very brief indication. On the right side here, we have the numbers. It was presented by one of the IC's analysis in REFSA's webinar earlier during last month. So it basically shows all the sectors that has been affected in percentage and the decline in the earnings. So you can see that certain sectors are affected much higher than the rest. As we expect, F&B, fisheries, tourism, they are all being very badly impacted. And on the left side here, you can look at the Malaysia Manufacturing Performance Index. I think it's a quite amazing chart, because I've never seen a chart like this before, where the sudden drop and dip is in almost direct comparison to the y-axis. So it's a very direct drop. And America has an unemployment insurance claims chart, which shows the other opposite, whereby the unemployment claims benefit rise directly in relation to the y-axis as well. So you are basically looking at a lot of people losing jobs, and the manufacturing sector is heavily impacted. So I think, how do we kickstart our economy from here? I can't say that I have the answers to everything, but I thought that we can lay out some sort of guideline to start thinking about it. I agree with Chee, we are definitely not out of the woods. A U-shaped recovery is the best we can hope for, but how U-shaped it goes and how long it'll take, I think that's anybody's guess. This is just a very simple chart showing how long it takes to develop a vaccine. So realistically, we are looking at some of these diseases takes years and years. So things like malaria and tuberculosis, they are not even licensed yet, the vaccine, whereas you have even shorter periods like measles and chickenpox, which essentially has a known vaccine. So I think this gives us a framework of how long this so-called new normal may take. It's not about waiting out and getting back to usual, but it's about adapting to the new normal. So the next slide here that I want to talk about is called the hammer and dance. It has been widely shared among the common literature as well. What it basically says is that when it comes to dealing with the pandemic of the COVID-19, certain countries have used the hammer approach, where at the start, you hit it hard and you hit it fast. You hit it quickly and aggressively. To a certain extent, Malaysia has been doing that. So you have strict lockdown measures, extreme social distancing to suppress the spread. And the idea is for the hammer to last for weeks, not months, not 3 months, not 6 months, but is to basically hammer it down. And the next thing, what you are going to expect is you are expecting the dance. So what the dance means is that once the hammer is in place and the outbreak is controlled, then you're in a much better shape to address it economically, socially, and things from a healthcare perspective, things like that. So this is where we have the long-term effort to keep the virus contained. But you know, people may misunderstand and say that, oh, our life will go back to normal, but it's not exactly that. We need to be educated about what the new norm is. We need to be aware of our new hygiene, personal hygiene, taking care of personal hygiene, disinfecting public spaces, our personal distance, wearing masks, etc., etc. And this is the time where the government can also try to formulate policies, perhaps with a 3 to 6 month plan, and you have to review it weekly and fortnightly as it unfolds, because we have to be agile based on information, new scientific research that we found how to best deal with the situation, and we have to be prepared to go through hardships and tighten our belt on this. So what the dance is basically saying is that there will be ups and downs. So the moment that there's an increase in cases and containment areas, the government may have to do different measures. So businesses and society as a whole needs to dance with it, needs to be aware of it and try to adapt to it. Now, the possible best case scenarios, I listed down a few because I thought, again, it's important to bear that in mind. The best case scenario is that you find a vaccine in the next 12 to 18 months, and that's actually very, very, very fast. You can also hope that the virus disappears, maybe like SARS, or in the longer term, you get population immunity and economic activities restored. But at the same time, you have another case whereby the virus may mutate and the pandemic may continue. You may look at second, third, fourth wave, and the economic activity may be depressed for longer periods, up and down. Definitely loss of livelihood. I mean, you look at European countries, you look at Asia, you look at America, these are already happening at the moment. I put social unrest as a question mark because you can never be too unprepared for this kind of scenario where mass number of people lost their jobs, lost their livelihood, and they are not able to have a decent living. So this next slide, I want to talk about the concept of build back better. When I talk about build back better, what can we do together as a society? So imagine, even if it's up to end of the year in December, where things are back to normal, assuming that you can meet face to face, you know, on the best case scenario, travel is possible, toilet paper is easy to buy, you know, but things have changed. And the key thing that I want to point out here is the human behavior and the experience of being a customer, the experience of being an employee, of being an employer, and the expectation as well of being a citizen, of just being as a human, you know. How will this affect the way that businesses are run, affect the way that experiences are designed and built? I think the answer to this lies in the way people and individuals react and hack into like the so-called new ways of living. So the first point I put down here is cost of confidence. Some decisions taken in normal life will become quite an anxious process, even if restaurants are open. Would you want to go out and dine together with strangers? The experience may be very anxiety, and you know, may cause you anxiety that in the end you take out the fun of going out to a restaurant or take out the fun of going to a cinema. What's the point of sitting 2 meters or 5 meters away from each other, as is the new norm, when you might as well just stay at home? So in thinking of all this, familiarity and trust becomes valuable and premium. So all this makes trust very valuable, and the erosion of confidence will put trust as a very key important thing. So this will change the nature of what we regard as premium product. If I'm familiar with a specific product and I trust the specific company, I'm more likely to engage in services from them. So that's the point that I wanted to mention. Now, the second point is the arrival of virtual century. I think it's inevitable that we are forcefully shifted to do most of our activities online, working, socializing, from shopping, even learning. So the adoption of digital will be accelerated. Anything that can be done virtually will be, and this is inevitable that the trend is going to move towards. Now, the third thing is health experience. Why do I say that every business is a health business? Is that even when the virus sort of toned down, the health will dominate. Concerns about the health will be amplified even after all this is over. So a health economy and an ecosystem will rise with opportunities for all to be part of it, because this will dominate the citizens' thinking. When you go to a restaurant, is the restaurant clean enough? Does it have a reputation of it? Does it have a set of SOPs? Do I feel comfortable that it has actually thought through about where the aircon ventilation is, how far the tables are, etc., etc. So health is a very big part of what we are all thinking right now, to protect ourselves and to protect our family. And the last thing that I want to talk about in terms of a human behavior is about the quest for a safe space. So there could be a higher desire to self-isolate, or the fact that we can quickly self-isolate becomes a luxury. And that means there's a rise in home spending. Anything that is in-related to making staying at home a bit more comfortable, those with creative strategies will be able to, will sort of rise in its opportunities. So again, this pattern will endure with home comfort carrying a price premium. So the next slide that I want to share is just some pictures showing sort of some new norms happening. I found this on the internet, and some of the sharings from previous RevSA webinars by our speakers, how things are happening in China, where workers and office workers and factory workers eat, whereby you are segregated. So it's a very individual experience. Students, this could be the new way forward to protect sort of kids from bringing diseases and COVID-19 sort of virus back home. This is two things that I picked up online, where airlines and designers are starting to look into how to make flying safer, and you may have designs like this. So let me go into a little bit brief overall on the challenges of the industry and a so-called whole of society approach. So the challenges that we are facing is that because between countries, the trading sort of frequency may be disrupted due to these kind of measurements to contain the virus. Economies may be very focused on self-sufficiency, especially in key sectors. So this is what we mean by, is there a risk of the economy being deglobalized, where supply chains may have to become more localized to ensure that we still can get the key essential items as a society. There's a concept of hyper-localism. So what we're trying to say here is that we may need to start considering how we can generate economic activity and employment and keep jobs alive in the country to ensure that businesses can still run and the economy can still run. The role of the government and the role of the private sector is what I would sort of put as a whole of society. We need to start thinking as a whole of society, because we cannot do this alone. On the one side, government should provide strategic sectors through investments and alignment with public and private innovation, foster a good economic environment to ensure that the market can produce items, and also at the same time not forgetting that the government should also create a very comprehensive social safety net to make sure that household income doesn't drop and people can still spend and people can still put food on the table. Now, on the other side, from private sector perspective, innovation, this needs to be looked at quite immediately, so that we can all move up the value chain together rather than competing on low cost. Obviously, there's a whole discussion on stakeholder and shareholder capitalism recently through the World Economic Forum, where we need to look at how we can socially and responsibly run a business to ensure that it's long-term and sustainable, and ensure that we can provide competitive pay for the employees, and they are actually at the end of the day also consumers that are spending in the market. Now, the next slide, I want to run through very quickly on how we can build a resilient business. One thing that I mentioned earlier is to build on a localized economy. So we can see that this crisis has laid bare the risks of too much interdependency on the global supply chain, and we are very susceptible to factors and completely outside our control. For example, when China locks down and parts produced in China are halted, you can't export your products, you can't import these products as well. So how can we build and create sectors that we need from a national perspective? We should also encourage a localized economy and start thinking about how we can enhance local supply chains and be more self-sufficient. The second point on the role of the digital tool, I think that has been talked over and over again. This is a very important factor given the fear of proximity, the fear of social distance with people. What you want is to increase and maintain productivity of your company, and you can reduce reliance on low cost or unskilled labor. And this is very important on the hammer and dance approach, as I discussed earlier. And the last but not least, I think that it's very important for us to start thinking about refashioning labor-intensive jobs, and how we can retain our local skilled workers and create better paying jobs, and tighten up the whole sort of supply chain system. This is the very last slide. I want to just touch through very quickly on the sectoral perspective. I think Chee mentioned he has a slide talking about the different sectors and whether they are neutral or unsure and things like that. I just briefly mentioned some that will be facing challenges, and there are sort of other opportunities that we can see. So as you can see, travel and tourism is going to be a very key challenge. We need to try to, for those in that industry, how can you pivot your business model to ensure that you are still relevant? Now, oil and gas is another key one, because recently with the crash and the depressed prices, we need to shift perhaps from a national perspective. We need to shift from a oil and gas sort of industry and look into something more forward-looking with the help of technology and digitizing our businesses. Now, the other one is commercial property. I think as Chee mentioned, commercial property has suffered a bit since the COVID-19 premise. There may be very much likelihood that their shopping malls will be impacted, the central business district offices, as people work more and more from home, and businesses start looking into how we can manage working from home and coming into office and staggering approaches. So these are the things that need to be considered. Opportunities, I think digital wise, as I said earlier, is a key driver. And it's something that we need to look at. But at the same time, how can we as a society and as a nation strengthen cybersecurity, making sure that privacy and cyber attacks are being contained? Now, the other point here is agri-business, including maritime. But I want to talk a little bit about food security. So food security is very, very key now, as we can see. Having cases earlier where in Cameron Highland, unfortunately, there were local produce that needs to be farmers have to get rid of them because there's no logistic to send them to the right places. But at the same time, we have people panic buying in supermarkets and things like that. So we need to balance that out. And last but not least, I think this pandemic has shown us the importance of healthcare and healthcare equipments, making masks, ensuring that our frontliners have enough protection for themselves, are very, very key. So how can we look into that together as a nation? So I think these are the broad slides that I've prepared. The idea here is to sort of give a framework and start thinking about how we can approach our economy going forward, taking into considerations the new norm or the new behaviors that consumers and citizens will be very anxious about, and how to make sure that going forward we can create a smoother sort of transition and build a very resilient economy. So I'll just stop right there, Katie, and then we can obviously talk more and take more questions after that.
Sure. Thank you, Ihan, for your insightful sharing. We heard you say that there are some hidden risks, especially in the lagging economic data of unemployment. We have seen US that they have lost like 30 million jobs within 2 months. Obviously, this is a very big problem that the government and the private sector, especially SME, will have to take a closer look. We have projection from MIER that says potentially for coming months, we're going to have like 2.4 million people losing their jobs. And if we put that into equation of a 15.3 million workforce, that potentially translate into double-digit unemployment rate, which I think is worrying. And on that note, I would like to touch a little bit on foreign workers. I mean, we know that there are probably 1.8 million documented foreign workers in Malaysia, and unofficially they are putting a number of 5 to 6 million foreign workers out of our 32 million population. Obviously, this is a very high percentage. From your experience and your research, is there a way, or is this the right time for us to restructure our workforce and our human capital management rather?
Right, Katie. So I think that's a lot packed under a question. I'll try and answer them as brief as I can. So the first thing that I wanted to say is that I think we should understand that it's not because that there's a bit of stigma going around Malaysia now about foreign workers and the fact that they are very highly susceptible to the virus and all that. So I want to mention first that it's not because that one is a foreign worker that you are more susceptible biologically to the COVID-19 virus. Doesn't mean that there's a higher risk. If you look at the population themselves here in Malaysia, they are actually a lower risk group because they are young, able men coming here to seek jobs, and women as well. They are not in the higher, old elderly group. So most of them do live in sort of subpar hygiene conditions potentially, but the silver lining in Malaysia is that they may not live in dorms crammed up in one place. For example, like Singapore, so you may not have a same issue like Singapore. Now, the risk with the risk that the undocumented illegal foreign workers in Malaysia is that they may not come forward for testing because they're afraid of being arrested and deported. So then they may not want to come out and get the necessary treatment. As you can see, 5 to 6 days ago, the government has rounded up 500 over undocumented migrant workers to so-called contain the virus. So you are basically pushing them into hiding where nobody wants to come out. And apart from overcrowding in detention centers, you may have clusters that are uncontrolled and you don't know who they are or where they are until it is a little bit too late. So I think from a long-term perspective, the way to look into this is that we have to rethink on how we can orient towards an economy where we can build and rely less on foreign workers. That's a long-term solution. So in certain countries, my husband is from Belgium, and as much as he can share with me, when in the property sector, for example, I used to be in the property sector. In Belgium, they can build a house with 2 people within just a few months, with 2 people. And the rest is all done with machines and automation. So clearly, that is the type of level of productivity that I think we have to consider to get towards, taking into consideration of now we have this pandemic where distance is a big issue. Now, from a short-term perspective, I believe one way to look at it, and I'm throwing out the idea here, is maybe we should consider legalizing them one-off to make sure that they get the recognition and they get the treatment that they need to. Because what you're looking at here is that as a society, the virus doesn't pick and choose. It will permeate to wherever it sees possibility and chances. So it is something that we should look at together as a nation. But at the same time, I think we need to move towards a model where we don't rely too much on the foreign workers. It will take time. It will take time. It will take years. But we have to start somewhere.
Okay, thank you. We do have an online question for Yihan, for yourself. What do you mean by keep R below 1 in the dance curve? Kindly elaborate. Are you able to take that?
Sorry, I unmute myself. Let me unmute myself.
Yeah, I repeat. What do you mean by keep R below 1 in the dance curve?
Okay,
kindly elaborate.
Let me just go back to the slide.
Yes, please.
Oh dear, hold on, sorry. Okay, so when what this chart basically shows is that you want to make sure that it's below the health capability that your healthcare system can sustain. So every time there's a spike in your cases whereby the health system may drop into a potential collapse, you may want to make sure that you have essential measures to make sure that you press it down so that your hospital beds are enough, so that your medical ventilation is enough, so that you don't get overwhelmed whereby there are other normal patients, cancer treatments, or someone get into an accident and they can't get their operation because all their medical staff is at the forefront. So I think that is so-called the done. So whenever it spikes up, you need to be aware and be prepared and have policies that you can push it down again, and it spikes again and you push it down again. So that's the whole idea.
Okay, thank you very much for your clarification. Earlier you did give us some preview of what the new normal potentially look like, and obviously social distancing is going to be big part of our permanent features in our life. It's easier said than done. Obviously there's enforcement agencies, there's businesses, they try to crowd every customer together. Can I just ask you, how do the business balance between the enforcement and the need to practice social distancing?
So I think there's two things here. First thing on the social distancing and the personal hygiene and practices, I think it is here to stay because you don't want to risk having infections in your business, for example, which would then result in, if you're in a factory, your factories may be shut, you may need to spend more cost disinfecting your items, disinfecting the equipment, and you may have to keep your workers at home for 14 days. All these are hidden costs, but they are nevertheless potential costs that you will definitely have to bear if in a scenario whereby your business is sort of affected. So to that extent, I think to me it's a mindset shift. Again, it's about a new normal. So there are guidelines out there, WHO guidelines on how to operate workplaces to the best of your ability. There are guidelines provided by the government, how to ensure construction sites are kept hygiene. How do you ensure that visitors come in, you need to log them. So you have to do all this, and you have to prepare and lay all these foundations before you can even consider how are you going to, ensure your normal business operation. So things are definitely going to change, whether we like it or not, because at the other side of the tunnel is that if you don't, you are risking sort of bigger cost that you are going to incur going forward. And even if regulations don't pull you down, as with social media, if customers realize that, then then your business will definitely be affected. If there's something about, oh, this book that came out from this factory is been tested positive, or there's some virus or something, somehow it get known, then what are you going to do with it? Because you're going to take a very, very long time for that trust to build up. So that is why I mentioned at the first part, as a human behavior, trust is going to be very, very, very important. trust between the government and the private sector, trust between the businesses and the consumers, trust between everybody in the sense of a whole of society. We need to understand that we are in this together, because if the virus do hit, it hits anyone. It can hit your family, it can hit your loved one, and there is sort of nothing you can do about it.
Okay, thank you very much again. I also hear a very interesting new concept about globalization. As we get into the epidemic of a pandemic of COVID-19, everybody's talking about globalization. You know, connectivity, interdependency of the supply chain globally. And I hear you talk about localizing the supply chain. Isn't that a conflicting situation that we are talking about?
I think it's less of a conflicting, it's not really conflicting, but I think what I want to sort of bring out is that because of the interdependency of the global trade, we see now that we are facing certain issues. For example, masks have to be sent from China to different countries, and you see that there are some tarmac war going on whereby different countries are scrambling for it. So these are the issues that are cropping up, and I think we need to be aware of it and we need to be prepared for it. And one of the ways is to build a very resilient local economy. So how do we do that? If we are talking about supply chain, we may need to change the way we think and start asking ourselves questions like, how do you ensure that if going back to the hammer and dance, how do you ensure that if suddenly a certain country experience a spike and there are very strict measures and close down, how do you ensure that your business can keep running? You are still getting your stock supply, you are still able to, you know, produce items so that you don't get affected. So if I give a very layman experience, if you talk about, say, a car manufacturing company. So a car manufacturing company, let's say you get a set of wheels coming in from Japan or China, and you keep it in your stock for 2 days or so. You're not going to keep it there for months and months because it's a liability to that extent. And now you can't get the stock because everything has shut down and closed down and things like that. So what do you do? So one way that I want to sort of bring out is that we may have to look into finding local suppliers, and if we don't have local suppliers, is it an opportunity to start looking into that, and perhaps the government can help in kickstarting and localize the economy? Because going back to my car manufacturing company, when you don't have the wheels, you can't produce out the items. You, as the car repair shop, you can't get your items, then you can't operate, and then you're going to lay off your staff. And your staff would become one of those household with no income, and they can't spend. So this will keep going on and going on. So it's to start rethinking about the situation that we are in. How can we move away? In fact, I think that we should probably look at a paradigm shift in moving away from a just-in-time sort of efficiency model to perhaps looking in a just-in-case efficiency model, where we are talking about resilience. So you're like, okay, no panic. We still, you know, let's still carry on. We can still work on a minimum level. We can still make sure that things are churning out. And at the same time, if things are more localized, you are also helping your local fellow other businesses. And so it's just the idea of going out and rethinking and looking into that. Yeah.
Okay, thank you very much for opening up the new perspective about the supply chain ecosystem. Obviously, this idea is worth explore further to achieve the objective of building a resilient economy. We will come back to you later, and at the same time, if you may go to the Q&A session, and there may be some question posed that's relevant to you.
Sure,
ladies and gentlemen, if I may bring your attention to speaker number 3, Dr. Shahree. Crisis is known as Wei Chi in Mandarin, and that simply means in any crisis, there are opportunities. Businesses may return to normal, and for some, it may not, due to the changes in consumer behavior, as Ihan pointed it out, and the landscape of doing business. Some may present as a threat and some as opportunity, which we can leverage on. Now, Dr. Shahree, being long enough in oil and gas industry and going through the ups and downs of the industry, I'm sure he is able to share with us his valuable insights and the tools that he used to overcome the many crisis level of oil and gas company. Dr. Shahree, over to you, please.
Right. Thank you, Katie. Good afternoon, everyone. And again, thank you, MCCC, for inviting me to be part of this webinar. I don't have any slides with me, so I'm going to just speak off the cuff on my experience and what I think about businesses moving forward. A lot of things that I think have been said. Ihan covered quite a bit in terms of supply chain disruptions and the impact of our economy in general by Chee. Yeah, and I think when we start talking about business strategy, you can't run away from be cognizant with what the government, your current where you are, the government is doing. I think only yesterday, I think the Prime Minister mentioned about the 6-pronged strategy that Malaysia took in terms of facing with COVID-19, the country itself. Yeah, I mean, he talked about resolve, resilience, restart, recovery, revitalizing, and reform of the economy. So the resolve part is what we started with. Yeah, I mean, basically it's about facing COVID-19 and how to flatten the curve. Putting up with all the protections, all the face masks, the test kits, the ventilators, preparing our infrastructure, our resolve in terms of facing the COVID-19 situation. Now, the resilience is basically the part where the government put in what Chee mentioned, the economic stimulus. So a lot of money being pumped to address in terms of consumptions, but money to the people. At the same time, money for the SME, the industries, in order for them to be able to survive in the next few months, if not years to come. Restart is basically starting on May 4th, where we reopen back our economy and now try to be prudent in terms of managing the situation, and hopefully the business can restart again. The next 3 stages, which is recovery, revitalizing, and reform, is a bit unclear at this point in time. And I think, again, this touched base quite a bit with what Ihan said. I think that portion is where I feel, if within the government and the private sector could chart together, then it would be quite effective. So that togetherness in terms of facing this is something that as a country, we have to do it together. Now, having said that, my focus is more on businesses itself. Yeah, I mean, we talk a bit about the global economy and the impact on our supply chain and so forth. But for businesses, when we talk about strategy for businesses, I like to simplify things by looking at 3 categories. One is the purpose you go into business. Second is the people side, your resources, your people, and the third really is your processes. So COVID-19 to me is a reset button. It's worse than World War II in a sense, because it impacts everyone. And and the biggest part that is impacted is people itself. Yeah. So you never had this situation in a financial crisis. It can be impacted.
We have a technical issue here.
Sorry, can you hear me?
Oh, yeah. Yes, you're back. You're back.
You're
back online.
Okay. Yeah, I think it's raining over here, and the line is kind of very shaky. So saying is, the current COVID-19 situation impact businesses, and for businesses, I think it's prudent to look at all these sides. Yeah, the purpose you are in the business, and as Ihan showed earlier, different businesses, different sectors are impacted differently. So, you know, in the oil and gas sector, which I'm very familiar, are impacted differently than the traveling sector. The tourism sector probably is the worst hit. And you look at airlines like Malaysia Airlines, Asia, and so on are impacted, you know, worse. And then you have, you know, somewhere in between, you know, the oil and gas has a double impact because, you know, you have this COVID, which restrains mobility, and so people don't travel, and therefore, you know, the demand for fuel and oil drops, and then you have the war and all the global, you know, OPEC and Russian oil condition.
We lost you again, Dr. Shahree. Perhaps while we wait for Dr. Shahree to be back online, there was a Q&A online. I believe this is directed to Chee. Are you there, Chee?
Yes, I'm here.
Okay. The question is that this pandemic has altered the investment landscape in real estate. In your opinion, should we shift from the traditional way of looking at the property sector, i.e. move into industrial sector, or still stick to the traditional way of looking at residential and condominiums?
Basically, I think this pandemic would actually move it faster towards demand for industrials in a way that the reason being, first, you have an overhang of commercial property and also on residential property. So it will take some time for all this overhang to clear and sentiment to improve on these two segments of the property sector. And the reason why industrial will remain robust in terms of seeing the demand is because there would likely be a shift, like what Yehun has shared. There will be some diversification of supply chains. For example, people may not want to locate all their factories in China, so they would look to set up another factory as a backup in other parts of the world. And Southeast Asia is attractive given the access to cheap labor, a relatively cheap land in Malaysia, for example. So Malaysia actually stands out in terms of attracting some of this demand for industrial property. And also one advantage that Malaysia has is actually good infrastructure, and that will support the demand for industrial properties here as well. So we have seen some MNCs starting to look at Malaysia in terms of the demand for industrial properties here. So as an investment, then it would be an opportunity for people with cash now to start looking at industrial properties rather than your typical condo and commercial properties as an investment. That's my view.
Okay. Thank you, Chee, for the clarification. I believe the other one is also directed to you. The question is recovery of stock market. Doctor, are you back?
I'm back again. Sorry about that.
Okay, over to you. We'll come back to you, Chee, later.
Okay, no problem.
Okay, sorry about that. Again, I think that the weather is also impacting, you know, the economic case we have.
Okay.
So anyway, so I was saying that, you know, as a business, I'm looking at a much more narrower perspective from a business angle. I think, you know, you got to evaluate the business that you are in and how COVID-19 is impacting your sectors. Yeah, it is quite different. Now, and then you got to also look at, you know, people talk about changing of norms. Yeah, we are in the new norms. I think again, any businesses, you always have to be aware of your economic surroundings and you know, and what COVID-19 does is really, like I said, a reset button where, you know, much of your norms are going to change for good. So as a business, you really got to look at yourself before COVID-19 and moving forward after COVID-19, what will change significantly? Yeah, there'll be changes in a lot of ways. But one of the things that I would really put my finger on is, again, it goes back to people in the sense that who your customers are, how your customers are impacting. I mean, the three wheels of the economy that generates are the consumer, the industry, and government. And where are this business going to come from? Business to business is going to be different. Customers, your people is going to be probably having lesser money in their pocket to spend. So if you are in F&B, the impact to your customer and the way you handle your customer will be different. Nowadays, if you look at the restaurants, the way you arrange your sitting is going to be different. You go to even in your LRT, the sitting arrangement will be different. And if you're restarting your business, you really have to consider how you're going to face with the new environment where to manage your customer differently. The logistic sides of doing things will be different. Nowadays, you will see on the road, as the lesser vehicle on the road, but you see the number of people doing delivery, food delivery has gone up. You see a lot more food trucks delivery. You see a lot more service industry for delivery has gone up. So, you have to really look at your business hard and say that, will your industry depends on this kind of services and how it will be impacting your business. I think, there will be, the shift will going to push for things like, we talk about, the e-commerce, where you got to relook back at how your channels in terms of supplying your products, your goods, or your services to your customer, that has to be relooked. And the supply chain. While we say that one of the points
looks like Dr. Shahree's area has got some connectivity issue. It's raining heavily out there. Let me bring back Chee. Chee, are you online?
Yeah, I'm online.
Yeah. One of the questions asked was the recovery of stock market, unit trust, and bond market as well. What kind of time frame we're talking about? 6 to 9 months, a year from now?
Okay, in terms of the stock market, I think this year would remain volatile. You would have the market reacting to news flow in terms of in certain times you have bad corporate results and market you see a correction. Then suddenly there's some news on potential cure for the COVID-19 virus or vaccine. Then it might rebound again. So I think there will be a lot of false starts this year, but there will be trading opportunities based on this news flow, and also drilling down to some individual companies where they will still do well despite the pandemic, but this will be very few in between. So you really have to take a long-term view and likely invest for a recovery in the market maybe in 2021 if maybe a vaccine is found or the pandemic has started to ease in terms of the number of new cases and all. So in terms of like a unit trust, of course, then you would have to look at it as a long-term investment, and you would have to believe in this dollar averaging kind of strategy where you put in money a bit at a time to capture on the volatility in the market, because ultimately the value of the unit trust is the value of the market stocks that they own. So I think for that reason, you have to take a long-term view if you want to put your money in unit trust and take it as more of a savings. In terms of bonds, I think it will also be volatile, and chances are bonds will still do well this year, mainly because a lot of countries are talking about cutting interest rates. Those that cannot cut interest rates, they will get the central banks to buy those government bonds, and that is why, given the demand for bonds to be high, and the yield curve will likely still be going down, then bond prices will be up. So on that expectations, people will still be trading on bonds, and it will be a good investment to lock in higher interest rates with interest rates coming down.
Okay, thank you, Chee Wei. There's also another question. Perhaps this is for Ihan. They ask about job.
Katie,
Yeah.
Shahree is back, so you may.
Okay. Okay. Can we
you want to
bring
catch him
online?
before he? Yeah.
Okay. All right.
Sorry, guys.
Over to you, Dr. Shahree. Yeah.
Sorry, guys. So again, I think it goes to show that you can plan everything, but there's other factors to consider.
Yeah.
Now,
the BCP part. Yeah.
Yeah, so I'll try and make it short and sweet. Yeah, so to me, if you're a business, you really got to relook at I mean, this COVID situation really forced you to look back at your purpose of your business, the people that you have, and the processes. And the people here, to me, is your workers and your stakeholders. So your staff is, you got to face with the situation where, working from home could be a norm. Managing your working hours alternately could be a norm. How do you manage all of that? Managing your safe work environment is going to be a concern. Like Ihan saying that, if you take that lightly, that could be actually costing you more because of health issue and so on. So you got to really look at your safe work environment, because recently there was a report in terms of how you place your air conditioner, and how it blows, from table to table, and all that is going to impact your working environment. So there's a lot of reset in place. I touch on the purpose because I think you got to really evaluate whether your business moving forward under the changing environment of the curtailment of people moving or limited mobility, will it impact your business? You got to really consider that. And the government policy on revitalizing the economy and prioritizing economic sectors, will that impact your business? You really got to take a hard look at that. There's no right or wrong answer about it, but you must be prepared if you need to pivot, because there are sectors that's going to be really, really bad, and trying to kid yourself that you're going to stay there and it will somehow improve, I think you're not being realistic. On the other hand, just because the rubber glove sector is good doesn't mean tomorrow you need to go into rubber glove industry. So you really got to take a really hard look at the data that are available, and see how you could pivot. So your purpose of business has to be relooked at. The people, the stakeholders is important. Government is doing all kinds of activities that is trying to link the existing businesses to the situation. So we have in the case of supply chain, there are a number of local MNC multinationals that has a supply chain issue that looks at local suppliers. So local suppliers needs to be aware who is looking for what product, and the best coordination for me is where government can play that middle role, and via the trade associations. So strengthening of relationship between trade association and government, as well as like China Chamber of Commerce, to me are agents that could.
I'm afraid we lost Dr. Shahree again. Back to the Q&A about job preservation. I believe this is directed to you, Ihan. The question is that in preservation of job. Oh, you're back. Okay.
Am I?
Yes.
Oh God. Okay.
But
yes,
you're breaking up.
You
You're
are.
breaking up. Yeah, you're breaking. We lost him again. Okay, Ihan. On job preservation topic, the question was, should we provide the preservation to sectors that can provide the most job, meaning to say industry that create more job opportunity, to those sector that that has technology that can produce futuristic business model. What is your thought on this? Should we like focus on certain area that we should be providing that financial support to them?
So I've actually answered very quickly at the bottom, but I will sort of expand and explain a little bit. So I think when we look at jobs, we shouldn't look at it in terms of numbers. We should look at it in terms of producing good jobs. There is no point if there's a lot of jobs with no prospect, where you can see that it's easily replaceable either by like AI or by machines or by other even low cost sort of model. So the key here is to how can we create good jobs that is sticky, that stays, that is not easily transferable, that the person doing the job actually can provide making ends meet and living a decent living, and also a dignified job. I think that's very important. Rather than looking at just the sheer size. Yeah. So I can see Shahree is back, so I'll pass it back to him.
Sorry, guys. Really beyond.
Yeah, welcome back. Welcome back, Dr. Shahree. Yeah.
So anyway, I'm on the last part of it. To me, the third part really is you got to look at your processes. You know, the processes that you used to probably will change. So you got to look at you know, how you handle your delivery, you know, your channels in terms of whether you need to use e-commerce. E-commerce there's also consequences to that. And I think this is where the shut-in economy comes in, because while it is a tool, it is an effective tool, but it will create a different kind of social people problem. You may end up with, you know, people sitting in their own rooms and everything is serviced to their doorstep. Another dimension that we got to be aware of. I think, again, going back to the theme that Ihan said, we need to address this post-COVID-19 together. It's the government, industry, and most of all, people, because it's going to involve everyone. And you know, to me, there's no other way. People addressing, you're in a business, you got to understand the impact that it has on people and all the processes that are involved with it. Yeah, so before my line get cut off again, I better stop there.
Okay, thank you, Dr. Shahree, for your insightful sharing. We heard you said about reset button. We heard you said about talk about enabler technology, especially digitalized. We heard you talk about people, especially. Now, to reshape business strategy, obviously involve change management. If I were to ask you, how do you rank those sectors? People, SOP, business model, enabler. How do you actually rank them in the sequence of priority?
Again, I would emphasize that, you know, people first. Whatever sectors that's out there, businesses, you really got to look at how people are impacted. Be it your staff, be your stakeholder, be your customers, you got to really look and understand how that is impacted. Without your customer, without your staff, your workers, your business just could not move. Then you can start looking at technology and you know, your processes or your supply chain. I think that the third part is more on supply chain. Yeah, because you know, technology is an enabler. So a lot of shortcomings that you have in terms of, for example, people-to-people contact could be reduced or could be softened by looking at available technology. So, you know, your channels or supply channels and whatnot could to some extent be addressed by looking at available technology. The thing that, you know, I spent 10 years in the government and it's quite interesting when you look at Malaysia, especially. 36% of our export are basically on electrical and electronics. We are actually quite big in terms of technology sectors. Ironically, to me, much of our export from technology, from electrical electronics, are MNCs. Whereas I think a situation like COVID, we should really explore the possibility of using our technology companies to solve the needs of what we face under the COVID circumstances. For example, you're looking at tools like whether it is temperature calibration or crowd control or managing health equipments and so forth. We should really look at our sectors and how we could channel more funds in using our technology companies to supply equipment. The other big contribution to our economy is oil and gas. And that's a double whammy because, on top of, like I said, on top of the COVID, you have the trade situation and OPEC plus Russia condition that forced the oil sector to go down. But people may not realize we have more than 3,000 very established oil and gas companies with very established engineering capabilities. Now, how can we pivot those companies and use them on the technology sector? That's something some want to look at. The reality is, while globalization is going on, and to some extent, this localization of
I'm afraid we lost Dr. Sharon again.
Losing me again?
Yeah, okay. You're back.
Oh
yeah, go
God.
on, please, Dr. Sharon. Yeah.
Okay. So I think there's a lot of things that needs to be looked at, but people, technology, and your supply chain. Koktun.
Okay, sure. Let's go to something closer to your heart. As we know, oil prices tanked due to two major factors. One is the pandemic effect due to lack of consumption. The other one is obviously the OPEC plus dispute on the production quantity. We have seen May future contract, in fact, never seen before, dip below zero. Obviously, we know that Malaysia revenue will quite heavily rely on Petronas dividend. In your opinion, are you there, doctor? Yeah, no? No, we lost him again. Perhaps Chee, you can take on that question on the oil price. As we know, a big chunk of government revenue actually came from Petronas dividend. Is there other options that we can look at, or is there other options that we can think of the way that we can, or rather government has other options to fill the gap?
Well, okay, because the government has actually diversified their source of revenue, including imposing the SST again, the sales and services tax, and the oil prices have been weak, and the contribution of oil price to government revenue has dropped to below 20%. So in that sense, the impact on the government revenues is not as big as before, but it's still substantial. So I think in terms of like the government revenue, at this point, it'll be difficult to increase, impose new taxes, given the weakness in the economy. I think what the government can do is maybe rely on non-government revenue, maybe tap on Petronas cash to actually help bridge the gap in terms of the current situation where we will probably run quite a high federal government deficit before the spending. So I think in the long term, I think the government has to look at new sources of revenue, may even have to reinstate the goods and services tax that was imposed by the last government. So I think at this point in time, there's limited things they can do. Most likely you have to raise more debt to finance the deficit and eventually look at how to raise revenues again with new taxes.
Okay, thank you, Chee. While we wait for Dr. Shan to come on online again, Ihan, are you with us?
Yep. I am.
Yeah, again on the job topic, employment topic, is there a need for paradigm shift that currently we are pretty much evaluate a worker based on 9 to 5 working hour time frame. Now, my point is that if a worker can complete a job within 3 hours at home compared to one that needs 6 to 8 hours in office, should we change that approach by assessing the productivity of an employee rather than the number of hours worked?
I think it's certainly, in my view, it's certainly worth considering. It is not something new per se. It's not like before the COVID-19 crisis, you know, nobody has thought about it. In fact, there were countries that allow employees to work up until 4 p.m. because they need to pick up their kids, and both parents work and their kids are in childcare service in European countries, for example. So again, that is the norm there, but that wasn't the norm here because, you know, in Malaysia, we have also this view that we have to see the employee and we have to know what they are doing. But clearly there are some roles that you can shift towards working from home much easier and more flexible compared to other roles. So roles like, for example, in REFSA, our researchers, they have been working from home, you know, together with as everybody else for the last 50 over days, and we have still, you know, able to come out with our content. We are still able to brainstorm ideas and to push forward the things that we want to do. We are doing webinars and things like that. So it actually doesn't really impact much. So so there's certainly, I think, room for discussion on that. But clearly, you know, as a company, you have to look into your policies and revisit some of these so-called terms. For example, how do you deal with absenteeism? Right? If you work from home, how do you differentiate? Maybe when you work from home, you need to make sure that, you know, your phone is always switched on and we can always get you from a company perspective and things like that. How do you look into taking annual leave and things like that? And clearly, one thing, you know, if you allow, I want to mention this is about women workers. So so on women workers like myself, obviously, you know, you have to pick up the kids and things like that. So flexible working arrangement will definitely and it's very crucial to allow women back into workforce. And why is it important to allow women back into workforce? Is because women is also very productive, and we are actually I think I can't remember the exact number, but we have as much as 50%, if not more, of graduates are women. So you know, there is no reason why you know, they should not be also given the same sort of weight in terms of balancing family life and balancing working life. So all these things will need to change, and it should change.
Okay, great. I think this is something that the business owners ought to sit down with the employees, and more so in time like this where unemployment is going to be a big issue. Rather than losing their job, perhaps they can sit down together with the Human Resource Ministry, the business owner, and so on, to draft probably a more amicable solution to address the unemployment threat.
Yeah, before I forget, so now we actually have real reasons to stagger, for example, working hours, to stagger, for example, lunch hours. Sorry, we can't all go out to have lunch between 12:30 to 1:30 because all the restaurants will be full. And do you actually want that? Maybe some employees don't want that. Maybe they want to bring food from home. So do you want to adjust that? So maybe some employees come in at 11 and then leave a bit later, or you know. So all these things are up for discussion.
Sure. And that obviously will entice more gig workers, the delivery boys, the so-called there's a economic terms. Is it stay in economy or something like that? Sorry.
Shut in economy.
Shut in, yeah. Sorry. You're back. Yeah. Suddenly you spring with a shut in economy.
Sorry.
Yeah. Over to you, Dr. Shahree.
You know, one of the things that I find quite important that you know, it's people and it's soft skills. Yeah, I mean, to me, you know, it takes a different kind of leadership in situation like this. You need someone who really can see the bigger problem, who understand that you need leaders who is not going to judge their employees, but understand the changing circumstances and accommodate to it. Because you're going to have, a different kind of leadership. It's no longer bossing people around, but you need to be more, accommodative. You need to be a bit more understanding. There's a lot more empathy with the current changing situation. So, even the leadership style that you're going to have has to be different than before. So again, it points back to people, managing the processes. And even when you put, IT infrastructure, you can buy IT system in and out, but ultimately it's the people that you need train to get used to using webinars, despite all the shortfall that it has in terms of, line cutoff and so on. So you need to have people properly trained to the new norms that we're talking about. Yeah, Katie.
Yeah, there is a question asked about the term that you say just now.
The
shut-in economy. Yep.
Yes, shut-in economy is basically a phenomenon come about very much because of us using a lot more technology, basically computer e-commerce, where people are literally now ordering things and delivered to their doorsteps. Yeah, so it's okay now to be in your room and you don't have to even walk to the shops or get your dose of meeting friends in the park, because literally you can order and everything get delivered to your doorsteps. So you're kind of shut in a sense that, but the consequence of that is social issues, emotional stress and so on were on the rise. So while on the one hand, to me, all this shut-in economy is very much a consequence of us adopting a different way of doing business. And therefore, the consequence of that is you get different impact to the society. So as much as we can't avoid technology, as much as, the genie is out of the bottle, you have to adapt to it. But at the same time, it's that soft part where being aware of what's happening, for leaders to be aware of what's happening and able to mitigate that is becoming more and more important. What's happening to their workforce, what's happening to their customers. This is the kind of new leadership that needs to come in place. Katie.
Yeah, okay. Thank you, Dr. Shahree, for sharing that the new terminology to us. Now, before we close the webinar, if I may pick the one final thought from the panelists, should there be one very important lessons learned from this crisis, this COVID-19 pandemic crisis? What would it be? Can I start with you, Dr. Shahree?
Sure. To me personally, Winston Churchill said, it's a crisis too good to waste. So it depends on how you look at it. It could be a very bad situation, or you can turn it around and say it is an opportunity for us to enhance our processes, to look at our people, recalibrate what is important in our lives. It's not just purely profit and economic returns. I think it is in Europe where they look at donut economy and talk about there's a limit to human using resources. It's not an unlimited scenario because there's consequence to people and the planet. So it's an opportunity for us to recalibrate and put lives ahead of everything else and work together as a country with industry or government and learn back the basic things of living in the same country.
Excellent. Johan, would you like to add on that? If you may pick one final thought from the lesson learned from this pandemic crisis.
Yeah, actually, if you don't mind, I'm just going to add on to Dr. Shahree, because I actually very much agree with what he says. I think what Dr. Shahree was saying is that let's not have a good crisis go to waste. I think this is a great opportunity for us to relook the structural framework that we have as a society, the social contract that we have between different parties. We have to relook that now, because going forward, it's not going to be easy. There'll be a lot of struggling. It'll be painful for everybody to a different degree, to different manners. So we have to bear that in mind, and it brings back to the whole sort of framework that I was trying to bring across earlier, where we have to build back better. It's a term being used after world wars, where you're talking about how can a country build back a better society when it's all, you know, when things are all in ruin, and this can only come together from a whole of society approach. Everybody has to play their part in it, and move forward together. That's all I would say.
Thank you. Chee, you have anything to add on this?
Okay, I will just add on from the perspective of investment. In the case of in every crisis, there's always opportunities, right? So how would you capture this opportunity? At this point in time, I would stay invested in equities, but look for opportunities. So when people go and run out of the door, when the market crashes, that's the time where you actually have the opportunity to invest in some good quality stocks, you know, stocks that have been shown to be resilient, like public bank. I mean, they would suffer as well because of bad loans and all. But at this point in time, there will be opportunities to invest for the long term. So I would keep some cash ready to invest in opportunities in the equity markets. Put some money in bonds, for example, to lock in the higher interest rates in fixed income funds, and also basically have a diversified portfolio. If you have properties, I mean, you just have to manage it. But at this point in time, it's not a good time to actually invest in properties because it will take a long time for the prices to recover.
Okay, thank you, Chee, for your recommendation. Ladies and gentlemen, COVID-19 might be looming over us like a dark cloud, and no one can know how long this will last. But this shall pass, even if we must focus on the most urgent interventions and expect repercussion to be felt in the short term. We should be able to learn lessons from this painful experience to emerge stronger and build back better, as Ihan said. If we take the right steps towards future-proofing our economy, we should be better and walk out from this crisis better. I also hope that this engagement has in some way contributed in shaping your thoughts and strategy in reshaping your business. Dr. Shahree did mention just now, Winston Churchill once said, which is also MCCC's President Dato' Tan's favorite quote: a pessimist sees the difficulty in every opportunity, while an optimist sees the opportunity in every difficulty. Now, with that, and on behalf of MCCC, I'd like to thank our distinguished panelists again for taking time during Visa Day holiday to be with us this afternoon. For those celebrating Visa Day, have a blessed Visa Day. And for those staying at home, stay safe. And we do have a couple of questions that we are not able to follow up. Some requests for the slides, which I believe MCCC Secretariat will arrange for that. There's also one asking for lengthening the moratorium of retail loans. Unfortunately, we are not in the capacity to answer that. So with that, I'd like to thank on behalf of MCC, I'd like to thank the panelists again, and to all the participants that has dialed in for this webinar session. I believe on this Sunday there will be another webinar. Unfortunately, it's in not unfortunately, but it will be in Mandarin, where there will be three distinguished panelists talk about unlock the secret of blockchain. It will be this Sunday. Please pay attention to MCCC's website. Another interesting topic for you to take on. With that, I sign off for now. Bye-bye for now, and stay safe. Thank you very much.
Thank you.
Thank Thank you, Dr. Shahree.
Thank you very
you.
much. Thank you.
Thank
Have
you,
a good
Ihan. Thank you,
afternoon.
Chee. Yep.
Thank you. Bye.
Thank you.
Bye.
Bye.